After a long week at work, John decides to go to a casino. He hates his job, so he has to take on the opportunity of winning millions. John has been doing this for 20 years and so far has lost $100 every week. It doesn't sound that much, but in total, he has already lost over $100,000 in 20 years. If he had invested that money in the S&P 500, he would have made a profit of $50,000. But John doesn't care about $50,000, he wants to become rich now. Because of this, he keeps on showing up at the casino every Friday. Every now and then, he wins something just to lose it in the next couple of weeks. The house always wins. A lot of people seem to think that because investing has its risks, it can be considered the same as gambling. What if instead of going all in on the red, we are actually placing our bets on different companies? We spend hours learning all kinds of formulas, theories, and analyzing companies, but in the end, is investing really just gambling? If you ask my mom, yes. Gambling, an activity characterized by a balance between winning and losing that is governed by a mixture of skill and chance, usually with money wagered on the outcome. That actually sounds a lot like investing. You are using your skills to analyze an investment opportunity, and there is always some randomness that you can't take into account that decides the end result. There are a lot of similarities between gambling and investing, for example, risk management. The gamblers are trying to maximize their profits while trying to minimize the risks. In some gambling games, like poker, players are calculating the odds for their winning and then place their bets according to those odds. So kinda like investors are analyzing companies, poker players are analyzing their opponents and the likelihood of their hand winning. There are also a lot of situations where people think they are investing, but in fact they are really just gambling. If you have no idea what you are doing, no idea what cryptocurrencies are, but you decide to place $1,000 in Alchemy Pay just because you found it at the bottom of the cryptos list, it has a cool name since you used to do high alchemy in video games, and it only costs $0.04, you are not really investing. Instead of throwing all your money in red, you are just throwing your money into some random coin, hoping for good results. Instead of doing that, you could throw a like button for the video. The key difference between investing and gambling is that in gambling, you are supposed to lose your money, especially when gambling in casinos. All the slot machines have a specific payout percentage, and it's always less than 100%. What this means is that if a slot machine has a payout percentage of 93%, gambling $100 should only give you $93 back. Over a short period of time this changes, you can for example win 2 games in a row and make hundreds of dollars, but if you continue playing, you will eventually end up at around 7% loss. Oh, by the way, want to hear a life hack? Last year I wanted Max Verstappen to win Formula 1 World Championship. I always lose my money when I'm gambling, so because of that I made a bet that Lewis Hamilton wins the 2021 World Championship in Formula 1 and put a lot more money than I usually gamble for Lewis Hamilton. I was joking that now Verstappen will definitely become a champion, and if not, I will finally make some money with gambling. Win-win. Lewis Hamilton seemed to have a lot better car at the end of the season, and he was leading the whole race before this happened. Then we had a safety car episode that had never happened before, and on the last lap, Max Verstappen became the world championship with one of the most controversial endings in the history of the sports. So if you want to lose your money and your favorite team to succeed, make sure to place a bet. And if you actually win the bet and your favorite team loses, you have the money to make up for it. Another key difference is that with investing, the prices go up and down, so sometimes you might not be making any profits and are losing some of your money if you decide to sell at that point. With gambling, in most cases, you either win or lose 100% of your money. When I bet Lewis Hamilton to win the World Championship, I was going to profit for the first 57 laps, but it all changed on the last lap. Instead of a 60% return on investment, I got a minus 100% return on investment. Investing in the stock market usually ends up resulting in profits in the long run, at least that has been the case in the past. For example, S&P 500 index goes down every now and then, but if you keep on investing it for longer than 15 years, there is not a single period that you would not have made profits. Even the worst possible situation, starting to invest in 1929, just when the great crash happened, would have made you money in the long run. Let's say that you invested $100 at the start of 1929. By 1944, you would have $132. Even at the lowest possible point in 1932, you would have $36, meaning that you have lost 64% of your money, but not 100% of your money. Of course, it is also possible to lose 100% even with investing. Even after analyzing a company, you could still pick one that goes bankrupt. Lehman Brothers was the fourth largest investment bank in the United States with about 25,000 employees worldwide. It was founded in 1850 and was doing business in investment banking, equity and fixed income sales and trading. Something like this might seem amazing investment. A company that has operated for over 150 years has to have a working business model, right? There is even a theory in finance called too big to fail, meaning that certain corporations are so large that they can't fail because failure would affect the whole economic system too much, so the government must support these corporations when they face troubles. In 2007, one share of Lehman Brothers was worth $86.18, in 2008, one share was worth $65, and in 2009, 2 cents. The company filed for bankruptcy on September 15, 2008, playing a major role in the unfolding of the financial crisis of 2007 to 2008. In fact, investing can be even riskier than gambling because with short selling you can in theory lose an infinite amount of money. With short selling, you are borrowing stocks and selling them with a plan to buy them back later for less money. This strategy is used when an investor speculates that the price of a stock is going down in the future. For example, if you borrow 100 shares and sell them for $10 each, you have $1,000. Next week, the stock price goes down to $7, so you buy 100 shares with $700 and return them to the borrower, making $300 of profit. But what if the stock price goes up? If the price goes up to $11, you would need $1,100 to be able to buy 100 shares, and you would have to return them to the borrower with a $100 loss. But in theory, there is no maximum price for a stock. This means that if the price keeps on going up for years and years, you could make an infinite amount of losses, in which case a 100% loss with gambling sounds like nothing. In my opinion, gambling and investing could be explained with the following image. There are some investments that are like gambling, and there are some gambling games that are kinda like investing. In the middle, we have things that are basically pure luck. You could be investing in something that you have no idea about, hoping for future profits. Or you are gambling against the house, meaning that in the long run you will always lose, but in the short run you might hit the jackpot and become rich. On the side, we have investments and gambling games that are not so much about luck, they are more about skill and knowledge with a small portion of luck. They require a long-term commitment because in the short term you can always lose money even with investing. While history does not guarantee anything about the future, investing in S&P 500 has always resulted in profits, but only if you have invested for more than 15 years. If you plan to invest less than that, then you are basically taking a gamble. In 2 years, anything could happen. If you are playing poker correctly and you are calculating all the odds, how much you have to bet based on those odds, analyzing your opponents correctly, and so on, poker could be seen as an investment. Every now and then you lose your 98.7% chance of winning in the river and become tilted, but if you keep playing for 30 years, after 10 million played hands, the probability should be on your side. As long as you are not playing against the house, but against other players, gambling has a chance of making you money. Another thing that has a great chance of making you money is the 2 videos on the right side of the screen. If you found this video helpful, smash the like button and subscribe for weekly personal finance videos. I'll see you next week. Bye.